Hello and welcome back to the Deep Dive. I'm Max Sledge.
And I'm Sasha Coyne.
Welcome everyone to another episode of the Token Trends Weekly Podcast. Usually we try to kick these off with something high energy, maybe a weird piece of trivia or a success story. But looking at the charts this week, I think the only appropriate opening is maybe a moment of silence for our portfolios.
Or perhaps a stiff drink. It is definitely a sea of red out there. If you haven't looked at your apps yet, maybe just don't.
That might be the best financial advice we give all day. But seriously, we have to talk about it. This isn't just a standard Tuesday dip.
Not even close.
Bitcoin has plummeted. It's testing that critical $60,000 level, and it briefly hit some lows that honestly make your stomach turn.
Yeah.
I mean, we're down roughly, 52% from the October 2025 all-time high, around 126,000. We've cut the asset in half.
In just a few months. And it's not just the price, it's the sentiment. I was looking at the Crypto Fear and Greed Index this morning. It hit a score of 5.
5 out of 100.
5. That's extreme fear. I mean, to give you some context, we haven't seen levels that low since the Terra Luna collapse or, the FTX crash.
Wow.
The market isn't just nervous, it is terrified.
So the mission for this deep dive is to figure out if that terror is justified. We're going to look past the panic, and you've pulled together some sources. You're calling this a triple threat.
That's the only way to describe it. It's a perfect storm. You have a new regime at the Fed, a shockwave from the AI sector, and geopolitical tension all hitting at the same time.
Okay, let's unpack this storm then. Part 1. Let's start with the one that kicked the chair out from under the market, the macro shift. You've called this the Warsh pivot.
Right. So this is probably the biggest driver. On January 30th, President Trump nominated Kevin Warsh to succeed Jerome Powell as Fed chair.
And Warsh, for those who don't know, he's not a dove. He's known for being pretty hawkish, isn't he?
Exactly. He's all about valuation over liquidity. And the market immediately read that as the death of the Fed put.
Okay, let's pause on that. The Fed put. We hear that term thrown around all the time. But what are we actually saying is dead here?
The Fed put is basically this belief that the Fed is an insurance policy. If the market drops too hard, they'll step in, cut rates, print money, save the day.
My safety net.
The safety net. And Kevin Warsh, he doesn't believe in it. He wants a smaller Fed balance sheet. He wants to take that away.
But hold on, this is where I get confused, and I think a lot of people are. Trump usually wants lower rates. He wants the economy roaring. Lower rates are usually good for crypto.
Right?
So why is the market crashing if he's picking his guy?
And that's the paradox. It's a great point. While Warsh might want lower nominal rates, he is philosophically opposed to excess liquidity.
So cheap money, but not free money everywhere.
Exactly.
Yeah.
He doesn't want to just keep pumping cash into the system to prop up speculative assets. He wants to remove that easy money. So the market is repricing everything for a tough love economy.
And Bitcoin has always been a sponge for that extra liquidity.
Precisely. It thrives on it. And if Warsh is coming in to dry up the sponge, well, the asset has to re-rate downwards.
Outflows. Okay, so that's the macro pressure. But then we have catalyst number 2, and this one came out of left field for me, from Silicon Valley, the Anthropic shock.
Yeah, this is a huge piece of the puzzle. On February 3rd, the AI company Anthropic released Claude Cowork.
I saw the demos for this. It's an agentic tool. It basically does the work of, like, a junior lawyer autonomously. It's really impressive.
It's incredible tech, and it is absolutely terrifying for the stock market. When they released this, traditional SaaS stocks just got hammered. Thomson Reuters was down, 18%? LegalZoom nearly 20%?
Because if an AI can do the work, you don't need to buy a software seat for a human. The whole business model is at risk.
The whole seat-based revenue model.
Right.
And that sell-off erased about $285 billion in value from software.
Okay, but play devil's advocate. I get why LegalZoom is down. Why does Bitcoin care? Bitcoin isn't a SaaS company.
It's all about correlation and the algorithms. Right now, Bitcoin and crypto are trading as high beta proxies for tech stocks.
High beta. So it moves in the same direction, but way more violently.
Exactly. Tech goes down 1%, Bitcoin goes down 3%. Institutional algorithms just lump them into the same risk basket. So when the software industry got rocked, capital fled from everything in that basket. Bitcoin was just guilty by association.
So Bitcoin isn't even trading on its own fundamentals right now. It's trading like a tech stock that's afraid of AI.
Which is so ironic, isn't it? But in the short term, it's just contagion.
Okay, so the Fed takes away the punch bowl, AI threatens tech, and then the third catalyst, geopolitics. the one that's usually supposed to be good for Bitcoin.
Yes. We had reports of a U.S. Navy F-35 shooting down an Iranian drone. Now, typically, crypto textbook 101 says what?
Fear spikes. People buy gold and Bitcoin. Digital gold.
Right, but that didn't happen. Gold did its job, spiked to over 5,500. But Bitcoin, it fell right alongside the risk assets.
That's a huge blow to the narrative.
It really is. When push came to shove in a real crisis, the market treated Bitcoin like a risky tech stock, not a store of value. It failed the test.
So that's our triple threat. Wow. Okay, that explains the trigger. But let's get into part two, the fallout. Because this wasn't a gentle slide, it was. An elevator shaft. You called it a long squeeze.
A brutal one. It's just a cascade of forced selling. You had traders piled into leveraged long positions.
Betting with borrowed money.
Right. And when the price slipped, it hit their liquidation points. We saw between $2.5 and $2.7 billion in liquidations.
In 24 hours.
In 24 hours. It's staggering. Long positions were 1.42 billion of the Bitcoin liquidations alone. It was a domino effect. Once we lost 82.5 and broke the 50-day moving average, the automated engines just took over. It wasn't humans selling anymore.
It was just machines forced to sell. And the volatility must have been insane.
Absolutely. The Volmex Bitcoin Volatility Index, which is sort of like the VIX for Bitcoin, it surged from 56% to nearly 100%. That's just panic buying of put options. Everyone's scrambling for downside protection.
So who was actually selling? We always want to blame retail, the paper hands. But the data suggests the call was coming from inside the house. This was institutional.
That's the scary part. This was institutional liquidity fatigue. Look at the ETFs. The U.S. spot ETFs saw net outflows of $545 million in a single day.
That's a huge reversal. Those ETFs were the engine of the whole bull run.
And now that engine is a brake. And it wasn't just them. We even saw some sovereign movement. The royal government of Bhutan moved 284 Bitcoin, about $22 million, to exchanges.
Okay, 22 million isn't a market-moving amount, but what's the signal there?
It's the narrative. Bhutan is held up as this beacon of sovereign adoption. So when you see them moving coins to potentially sell, it adds to the story that even the smart money is de-risking.
And we have to talk about MicroStrategy, the whale of whales. How are they doing?
Not well, on paper at least. With Bitcoin below 76,000, their recent cost basis is negative. They're theoretically underwater, showing a paper loss of around $630 million.
And the stock market just punished them for it.
Oh, yeah. MSTR dropped about 20%. When the biggest bull in the room is bleeding, it shakes everyone's confidence.
And you mentioned there's data showing this is U.S.-driven selling.
Yeah, the Coinbase premium gap, it went negative. And since Coinbase is the main spot for U.S. institutions, that tells us they're selling more aggressively than the rest of the world.
So Bitcoin is battered. But what about the rest of the ecosystem? When Bitcoin sneezes, altcoins get the flu.
It's a bloodbath. I mean, Ethereum fell below $2,100. And then, to add insult to injury, Vitalik Buterin was spotted selling.
Oof. I saw that headline. Terrible timing.
He sold about $6.2 million worth. It was for a donation plan, sure, but in a market this fragile, the optics are just awful.
And DeFi.
Under immense stress. Over 265 million in ETH positions liquidated. There are rumors of major funds like Trend Research and Bitmine Immersion facing just massive unrealized losses.
Sounds like systemic risk is bubbling up again.
We're not at Three Arrows level yet, but the fractures are there. And one more bearish signal. Stablecoins. Usually in a dip, their market caps grow. People are cashing out to buy the dip.
The dry powder on the sideline.
Exactly, but not this time. The Tether USDT market cap saw negative growth for the first time since 2023.
So the money isn't moving to the sidelines. It's leaving the stadium.
It is packing its bags and going home to fiat. That signals a much deeper loss of confidence.
That is a very sobering picture. So let's look forward. Part 3, future perspectives. Where do we go from here?
Yeah.
Because the sources are all over the place.
They really are. On one side, you have the bears. Nouriel Roubini, Dr. Doom. He's calling this a crypto apocalypse.
To be fair, he calls for that every time Bitcoin drops 5%.
He does, but the technicals are giving him some ammo this time. If Bitcoin loses this $60,000 support, the next major level is the realized price.
Explain realized price for us again.
It's the average price at which every Bitcoin last moved. It's basically the cost basis for the whole network, and that's around $55,325.
So that's the break-even point for the average holder.
Exactly. If we go below that, the average holder is underwater and panic tends to accelerate. Some analysts see a risk of 40,000 if that level breaks.
Okay, that's the gloomy side, but there has to be a bull case somewhere in here.
The big banks and the ETF issuers are holding the line. Matt Hugan from Bitwise is arguing this anxiety mirrors the bottoms of 2018 and 2022. He's calling it a potential excellent buying opportunity.
Buy when there's blood in the streets.
That's the idea. And Bernstein and Standard Chartered, they haven't budged on their price targets. Still 150,000 for year-end.
150K. That feels a million miles away. What's their logic?
They're betting on the long-term tokenization supercycle. They think the utility will win out eventually, regardless of what the Fed does in the short term.
I also saw this fascinating split. While institutions are running, what are the regular folks doing?
That's the glimmer of hope. The number of new Bitcoin addresses actually hit a 2-month high during the crash.
So Wall Street sells, but Main Street is buying the dip.
It looks like it. A classic redistribution of risk. The tourists are leaving, but the believers are accumulating.
So pulling this all together, are we seeing a paradigm shift? Does Bitcoin have to change its identity?
I think we have to accept that it's transitioned. Bitcoin is a macroeconomic asset now. It doesn't move in a vacuum. It moves with Fed nominations and AI news.
It's all connected.
And this Warsh era, if it happens, will be the ultimate test. If easy money is truly over, assets have to prove their real-world utility. You can't just float on a sea of liquidity anymore.
I mean, that ties right back to the AI point. If AI keeps crushing software stocks,
then crypto might struggle to decouple. It needs to prove it's distinct from a tech stock. It hasn't done that yet.
that is a lot to digest. Okay, let's summarize. We are witnessing a massive reset. Over $2.5 billion in leverage flushed. Sentiment is at rock bottom. And the market is trying to decide if $60,000 is a floor or a trapdoor.
Precisely. And the rules have changed. The Fed put is gone, and the correlation to big tech is stronger than ever.
It raises a really provocative thought for everyone listening. If the Fed put is truly dead under Warsh, does Bitcoin have to change its entire narrative? Can it survive as a liquidity sponge in a world that's not so liquid?
That is the question of the year. And honestly, I don't think we have the answer yet.
We will be watching it very closely. Max Ledge and Sasha Coin signing off.
Thanks for listening.
And hey, if you want to stay ahead of the panic and actually understand these macro shifts, make sure you subscribe to the Token Trends Weekly podcast. We'll keep you informed. Catch you in the next deep dive.